Welcome back to Wealth Practices. The chaotic and unpredictable realm of the stock market is likely the first thing that springs to mind whenever the topic of investing is brought up. It's easy to get confused when there are so many charts and numbers. Before we get to the breakdown, make sure you are subscribed to the Wealth Practices channel. So let's break it down and look at it more closely. Make an effort to decipher what it means. Let's imagine you've developed a successful company, but you're at the point where you need additional funding to take it to the next level, or maybe you just want a private aircraft. Where do you obtain the funds for your activities? I have a suggestion for you. Why don't you split up your firm and sell off pieces of it while keeping the majority of it for yourself so that you may continue to run things? This kind of transaction takes place on the stock market, and it is referred to as an initial public offering, IPO. However, how much money do you anticipate making? Take for instance Mark Zuckerberg's side project, the social networking website Facebook. It made its debut on the stock market in 2012, offering 337 million shares at a price of $38 each. Not too shabby, right? But when he learned that there are so many more people who want a piece of his pie, he added another 84 million shares. This is because there are so many more people who want a piece of his pie, 421 million. And would you believe it? He was successful in selling each and every one of them, and collected a total of $16 billion. In a matter of hours, he went from being a millionaire to a billionaire. In point of fact, the price of the stock rose to $45 during the first day of trade after it was issued. It would appear like Facebook was having a lot of success, but it was far too soon to start celebrating because its value dropped to 38 by the end of the day, and that was just the start of its downward trend. The unfavorable news was only getting started. Over the course of the subsequent several weeks, the stock reached a low of $20. The price has been reduced by half from its initial level. Now, in order for us to have any chance of comprehending what is taking place here, we need to get to the bottom of the stock market. Historically, investors have purchased stocks largely for the purpose of receiving dividends. When you buy a share of stock in a firm, in principle, you become the owner of that business. This indicates that you are the same as every other owner. Possess the legal right to a share of the company's profits. Congratulations, you have just become the owner of Facebook just like Mark, as a result of your investment of 10 Facebook stocks in January of 2017. I am not joking when I say that you now own Facebook. So, how much of that $15.934 billion, which your firm, Facebook, makes, actually belongs to you? As the day comes to a close, you realize that the purchase of your 10 stocks cost you a total of $1,300. The price of a share of Facebook stock in January 2017. But before we get into it, let's take a look at the overall amount of stocks that are available. It has been determined that there are close to 3 billion of them in all, 2.956 billion. It's unlikely that your 10 stock will matter at this point. But let's look on the bright side. If we divide the company's total net income by the number of shares outstanding, we find that each stock should receive a little more than $5. 5.39 equals 15.934 billion divided by 2.956 billion. This figure is known as the company's earnings per share, EPS earnings per share. To put it another way, you should expect to make almost $54 from your 10 stocks, 53.9. That's not that horrible, is it? But that's just a theoretical example. In reality, you won't receive anything at all. The decision of what to do with this money is going to be made by the board of directors of the company. And since their number one objective is to line their own wallets and grow the business, nobody is much concerned about the 10 stocks you own. But you shouldn't be too concerned because not everyone is a con artist like Mark Zuckerberg. For instance, in 2017, Apple distributed dividends of $13.269 billion, which works out to $2.50 per share of stock, 2.46. Even though it is not very much for a stock that costs $170, having something in your possession is always preferable to having none at all. On the other hand, in today's market, the price of the stock is the only thing that truly matters as much as how much the company pays. Investors who owned Apple stock saw their holdings increase by 33% in just 1 year. That is far over the market's typical value, going up to $160 from $120. It is likely that you are already aware that Apple was the first firm to reach a valuation of $1 trillion after the stock price of the company's shares surpassed $200. What if, however, I told you that up until June of 2014, the price of one share of Apple stock was $645? Does this imply that the corporation had a value of more than $3 trillion at some point in the past? Oh my God, navigating the stock market must be one of the most difficult things in the world. Let me clarify. There are things that are referred to as stock splits. Each share of stock was divided into 7 equal halves, and the prices dropped by the same percentage across the board, $92.70. Although technically nothing has changed, the price of Apple stock has decreased, making it more affordable for more people to join the community of Apple investors. Given that one share of the stock costs $92 at the moment. However, not all businesses operate in this manner. Some choose to collaborate with only serious individuals like Warren Buffett. The stocks of his company, Berkshire Hathaway, have never been split before. This is the reason why it only has 1.68 million shares, whereas Apple has 5 billion shares, 4.91 billion. Because of this, the price of a single share of Buffett Hathaway stock is more than $300,000. I would venture to say that the majority of us will never become members of Buffett's secret investors organization. However, you shouldn't be concerned about this because Buffett wouldn't mind stealing your money as well. Because of this, he decided to develop Class B shares, which are more accessible financially, $200. The topic of the stock market is always being discussed, but unfortunately this film has to come to a close. Thanks for sticking with us till the end. As always, make sure to click both the subscribe button and the bell that's next to it. I want to express my gratitude to you for watching, and I hope to see you in the subsequent video.